All right, folks, back to work. We're not done just yet. We got one more day left. Non-farm payrolls coming out tomorrow morning. And boy, do we have a lot to talk about on what might be the most important video of the week this week. Now, we have three big clues right now. Big move up this week. Tiny ranges on the tick charts the last 24 hours. And of course, non-farm payrolls coming tomorrow. Those three clues, they set the table for a massive rug pull to finish off the week tomorrow morning. Now, we may not get the rug pull tomorrow, so we'll cover some different scenarios in tonight's video. By the time we're done, though, you'll have an easy roadmap to make some money tomorrow, no matter what we get on Non-Farm Friday. So time is ticking. Enough of the intro. Let's go make some money. Finish up the week on Non-Farm Friday. Charts look pretty good right now. S&P and SPY is all ready to go tonight. NASDAQ, triple Qs are all ready. I have three very simple but important clues here on the charts right now that are telling us where I think the winning trades are waiting for tomorrow. I talked about the first clue in the introduction. We have a really big move higher here on the S&P SPY, big move higher on the NASDAQ, triple Qs, and these teeny tiny ranges, very narrow price action on the faster time frames over the past 24 hours. It's important that we understand the markets love to expand and contract, expand and contract. So if we're now in contraction right now, you know these markets are just asking to get some expansion of this volatility coming tomorrow, possibly early next week. Combine that with a big move up. You know everybody's waiting for a deep pullback right now to buy the dip. And again, that catalyst, that non-farm payrolls tomorrow could light that fuse for a massive rug pull. That's one of three clues on my radar for tomorrow, setting the table for a rug pull. Now, how do we trade a rug pull environment tomorrow? Well, good question. I have two more important clues on some faster time frames, some tick charts. Help us wrap this all together. Time the perfect rug pull entry. We're going to cover that in just a moment. Don't you worry. First things first, though, let's check schedule for tomorrow. Tomorrow's a Friday. There are three things on my mind tomorrow. First, of course, is the employment number at 8:30 Eastern Time. Second, tomorrow is consumer sentiment. That oftentimes a very big catalyst on a Friday morning. And Friday mornings are not like any other day of the week. My mindset on a Friday morning is to get in early when volume is high and I'm at my best. Take some profit early, get some green on the screen. And one thing about Fridays, leave a runner. Go back and see for yourself. About half of all Fridays, they love to make these big moves into Friday afternoon. So leave a runner. So three things, mine for tomorrow. You know the employment number is the big news of the day. That will shake things up tomorrow. Don't sleep on that consumer sentiment report, though, at 10 o'clock Eastern Time. And again, Friday mindset. Early in, when I'm at my best, remove risk, take some profit, get some green on the screen as we sit in the trade room, but leave a runner on Friday afternoon. Now, back to our charts, though, because we know when the news is tomorrow, but the money is made on these charts. I mentioned earlier, we're setting the table right now for a possible rug pull for tomorrow. And again, I have no crystal ball for tomorrow, so we'll cover some different scenarios. We know we're bullish overall, big move up, tiny narrow price action there. You can see how it gets narrower, right? Narrower every time it goes higher here. Again, markets love to expand and contract, and so expansion may be coming tomorrow. Let's grab some tick charts, though, because again, we're not going to trade off an hourly chart tomorrow morning. I like to use tick charts because tick charts, they make pattern recognition a lot easier. And since we all trade patterns or chart patterns, right, this is the perfect time frame to do it. 7,000 tick chart, all the time frames you'll need in the upper left-hand corner. And that yellow line right there is the 21 EMA, in case you're watching for the first time. There are two more important clues here on the tick charts. One very important clue, bullish market into a trading range. Why is that important? Well, because ranges act like magnets and they love to rotate back and forth using triangles, using pendulum swings, right? The amount above, the amount below. Ranges love to rotate back and forth using symmetry and triangles. One big clue there. Second clue, if you watched last night's video, they got that range from last night's video. Anytime we see a range breakout pullbacks are always something we pay attention to. So put these clues together here right now, and it's easy to see. There really are two main scenarios for tomorrow I want us to be ready for. The first scenario is what really should happen right now. What should happen is we should be rotating back and forth here inside of that trading range. But again, with all the clues we've seen on the 60-minute and the big news tomorrow, I want to talk about a big rug pull going on if we do get that rug pull tomorrow morning as well. So why don't we spend the first half of this video, let's talk about the game plan we should get for tomorrow. In the second half of the video though, let's break down a rug pull game plan. That way, if we do get that rug pull tomorrow, you all have a recipe, a game plan to make some money on that. So scenario number one here on the S&P, what should happen right now? We should start seeing these bears try selling down here. And I love to use what is basically a bear trap. Trap the bears in, squeeze those stops, and run back higher and get that rotation going back higher. I call these failure patterns in our free video classes, right? Trap the bears in, buy into those stops as they're running higher. Now, when it comes to ranges, we always like to look for failures at the edges of ranges and then look for traps as the market rotates going higher. So what really should happen down here, and again, we'll talk about what may happen with a rug pull a bit later on, but your typical scenario in a range environment like this is to grab what would be a failure pattern, 2 tries for the bears, trap those bears in, and then add to your winner with a technical bear trap. It's that higher high in price, that move right below that low. If I had it my way tomorrow, I'd go a bit lower here and get into that bear trap zone. If you're a student of mine, you know what that bear trap zone is all about. Run a bit lower, trap the bears in. Don't pick the bottom down. We're not going to pick the bottom on that. Trap the bears in, buy into those stops. As we start to separate off that moving average, look for that higher high in price and that bear trap combo going back to the other side of that trading range. Now, once we find ourselves on the other side of that trading range, we now start looking for what is basically a breakout pullback, right? We're a bull market overall. If we do see that strong run going higher, we then look to use the range for a breakout pullback off of that high. Now remember, whenever I say breakout pullback, I always like to think about a two-legged pullback, right? So imagine now we rotate off that low. I'm going to try to use that range now as a key area of support and think about a measured move, right? A measured move, one leg, two leg. When I think breakout pullback, I always think about a measured move. Think again, two-legged pullback, measured move, going lower. And as always, I'm not going to pick a bottom on that, right? What I'll do is I'll go in and try to trap those bears in with that failure pattern, 1 try, 2 try, and then run up and add more on that bear trap combination. One really cool thing about breakout pullbacks also is the size of that breakout leg can be used as a measuring leg. So if you want to make more money, get better at holding on to your winners, the size of that breakout leg is a really easy way to tell where to leave that runner on a Friday afternoon. Now, what if we don't get that strong breakout? How would I sell back here with basically a bull trap, right? So if we run higher here, remember, ranges love to rotate, right? So we rotate up, back, and forth like that. I can sell off this high, but I got to be careful, right? Because we're overall bullish, a lot of bullish momentum in that scenario. The way you sell off the high here is as we go up, we wait and see if these buyers will chase after it. Let them try once. Go lower. Why lower? Because buyers want to buy low. We have to rope those buyers in, let them try twice, 1 try, 2 try. And I want what is technically a bull trap off this high. And of course, I teach this in the free video course, but a strong red candle closing back below that moving average, right? So again, ranges love to rotate. Let's get this market going lower, trap those bears in, squeeze those stops, add more as it rotates higher with a bear trap pattern. And if it really rips going higher here, it's that two-legged pullback. Buy that breakout pullback, use that breakout leg as the measured move leg. And again, if we wind up here, but buyers start struggling, they're struggling off that high, it's that crown reversal pattern and that short back down again. That's what should happen for tomorrow. tomorrow. But I want to talk about, though, if we get some extreme conditions, a big move higher, or even better, a rug pull tomorrow morning. But before we do that, though, let's take a moment, though, because I know most of you folks watching right now, you know these patterns already. You're making money with these. But if you're watching for the first time right now, this might be a brand new language I'm speaking, a brand new strategy you want to learn more about. So I teach this entire roadmap, the entire system. In fact, I have a ton of examples of bear traps, failures, two-legged pullbacks. I cover so much more of this in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course to learn more, because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that tells us exactly where the winning trades are going to be each day. More importantly, though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I share and include in that short video series. The best part is it's 100% free. Also be aware too, I'll put all the important links you'll need to get access to the free video classes, join our trade room. I'll put all the important links in the description of the YouTube video. I would definitely start first though. Grab the free course link, get started, learn the roadmap. Everyone loves the free video series. And then come join us every morning in our trade room. I'll put trade room membership information down there for you. 8 o'clock Eastern time. The place to be is in our trade room. And if you're on Twitter or X, I post a bunch of charts, videos, mindset stuff on Twitter X. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more about this stuff and hopefully earn a bunch more because of it is all included in the description of the YouTube video. So now let's talk about that possible rug pull scenario over here on the NASDAQ. NASDAQ, you'll notice here, is very similar here right now, right, to the S&P. We have that obviously a very big move going higher here. Remember, anytime we see a big move, we know that we have to kind of get a deeper pullback. Eventually, the buyers will run out of bullets. It seems like this thing keeps going up and up and up again. But remember, there's no free lunch in trading. There's no free lunch in these markets. We can't keep going higher forever, although it seems like it will be the last few days here. But remember, combine that with these. Look at how it gets wider, narrower, narrower. Now, again, that's no guarantee for a rug pull, but it sure is a big red flag. Combine that big move with narrowing ranges right now and non-farm payrolls. That's a ticking time bomb for a lot more volatility coming the next 24 to 48 hours early into next week. Now, again, hourly charts are great for big picture. They're not going to help us time the best entries. Let's talk about timing entries here on the NASDAQ. NASDAQ is a gorgeous, gorgeous chart right now. You've got that range right in front of you. Again, ranges, they love to rotate, right? Rotation back and forth. So just like on the S&P, we should be trying to rotate back up again, take out those highs. And because we're overall bullish on the hourly chart, more likely now to break out through that high and give us that breakout pullback. And again, if you watched last night's video, we got that beautiful range. I mean, these are just dream scenarios right now. Breakout, pullback area right at key levels of support. It's almost too bad the non-farm payroll numbers coming out tomorrow morning, because this was one of the cleanest setups we've seen all week here. And again, like I said earlier on the S&P, right? In these scenarios, I would love to go a bit lower here into that bear trap zone. Again, if you're a student of mine, you know what I'm talking about. Run it lower, trap some bears in, use that 2-try failure, squeeze some stops, go up, grab another bear trap combo off that low and complete that rotation back going higher here. And again, as it rotates, if it really blasts and runs up, it blasts going higher, we then look for that 2-legged pullback and buy that breakout pullback off that trading range. A very simple cut and dry. But let's get serious though here now. Let's talk about if the you-know-what hits the fan tomorrow morning. We may get a big rug pull. If we see a very strong rug pull tomorrow, it's very important to remember a strong run down. Even though we're overall bullish on the hourly chart, all of that momentum going lower is going to want to pull back, retest its low before we go back up and resume that long-term, right, 60-minute hourly chart trend overall. So that dynamic, right, that dynamic is a really, really big part of the game plan if we rug pull tomorrow. I would imagine if we rug pull tomorrow, that prior all-time high at 340 on the NASDAQ, the prior all-time high, where is it on the S&P at 53 and a quarter, right? So think about those prior all-time highs, right, on the hourly over here, right there, right? That prior all-time high, that's a gimme, right? A very obvious rug pull level there. Same, of course, here on the NASDAQ, right? You got that prior all-time high there. That, again, is kind of a gimme area for where rug pull will be coming in. That area, easy to think. That'd be a great spot to buy the dip for tomorrow. Now, again, buying the dip is easy in theory, right? But again, in practice, it gets a little more complicated. So if we know that a rug pull going lower is going to want to retest that low before it makes the run higher, we have to make some small adjustments to our entry. For example, in this area, I'm not so worried about momentum. We talked a lot last night about location and momentum. I'm not so worried about momentum in that area. I can be relatively aggressive, right, on the entry right here. But if we get a strong run down, now I got to protect myself against momentum. So in these situations, this is where that same crown reversal pattern, basically a bear trap, comes in handy. Now, in the free video course, You'll learn the difference between a failure pattern and a bear trap pattern. A failure pattern, 1, 2, you're basically buying as we go higher, right? You're buying as you go higher. The problem in this scenario, though, is we know that as we go higher, who's waiting up there? Yeah, bears are waiting up there to try to whack that thing back down again. I don't want to buy high if it rug pulls going lower. What I'll do is I've got to buy as low as I can. My mindset in an overall bull market with a rug pull is always going to be to buy as low as I possibly can. And if you're in my free video class, you know, whenever I want to buy low, I buy with bear traps. It's a higher high in price and move right below that prior low, right? A bear trap going higher. And as always, if we start running higher, keep on adding to that winner with all the bear traps. Right? Bear traps are always going to be the easiest way. You know, there are lots of ways to skin this cat, but consistency is what matters most. At least it does for me, right? I'm not trying to get lucky. I want consistent winners. And the most consistent way to add to your winners as we start to make our way back up into that range is always going to be another bear trap. Now, it's important you see these are technically the same pattern, right? They're a higher high in price, higher high in price, and they're going to move below a low. They're technically the same bear trap. The first one, though, is more of a reversal pattern. The second one, of course, more of a continuation pattern. Most folks learn the continuation pattern first, but they're both valid. Now, a variation of this. We may get that rug pull, and there might be so many buyers down there, we may not get a bear trap. It may just whoop and run right back up again. These are challenging, right? Because if it V-bottoms off that low, that little voice in your head is going to start screaming at you, get in, you're missing it. Now remember, anytime I see a V-bottom, the last thing I want to do is chase after it, right? Again, you know, you might get lucky chasing after things, but it's tough to get lucky every day, right? Tough to get lucky consistently over time. My favorite entry on this is to mark a trend line. Off the high, mark that low, find that channel. And what do we always say in our trade room, in these videos? Look left. Find one of these prior swing lows that line up with the low of that channel, and I want that first test off the low of that channel. Now, I can't teach all the entry tactics in these YouTube videos. YouTube wants me to keep these videos as short as possible. But this could be a bear trap. I love the bear trap entry on this. It could be a failure pattern, a pullback combination, and possibly a strength trade on this. Again, go through the video course I mentioned earlier. That'll all make a lot more sense there. The goal is to go back up, though, into that range. Any of the entry patterns you guys are learning inside of the free video course. So bear traps, got to be bear trap, like technical bear traps, not failure patterns. If we see a big rug pull, and again, if it V-bottoms on this, find that new channel, get that first test, is the best test off that channel low. Now, remember, as it makes that strong run down, we may get that bear trap down here get in on that bear trap, pop it up, and who knows, right? They may hold the underbelly of that range. Sometimes they'll hold prior levels of support. Okay, so if we do get that run back lower, yeah, see, that's almost a gift to us, right? Because once they retest that low, think about what's happening right now. Anybody who sells on that pullback, where's their profit target? The majority of sellers will take their profit targets at the low of that move again, right? So sellers up here become buyers down here. Is this a good place to sell short? No, right? It's the last place you want to sell short. If you want to sell short, sell the pullback. Not my favorite trade for tomorrow because oftentimes they keep going. Again, we're not a bear market overall. We're a bull market overall on the 60. That's our filter for this stuff, right? Remember, don't lose sight of the big picture right now. So if I can trap in some rookie sellers chasing after it, now what pattern would I use on this? Do I have to be as cautious as I did on the initial move lower? I don't, right? On the initial move lower, I don't know how far that will go, right? It may keep going, right? So I have to be very cautious on the entry on that, be very selective with a bear trap entry, right? Because again, it may keep on going lower. Once we get the pop up, and we're going to retest that low. Okay, now we know where that low is now, right? It's a big difference. Much more difficult to pick a bottom on the way down than to buy that retest trade. We talk about the retest trade a lot here on these videos. This is now where I can be a lot more aggressive. What I mean by that is now use that failure pattern. 1, 2. Remember, on this one, I can easily be a little more aggressive and buy that failure now going higher as long as I can get a 1-to-1 between that entry and that high right there, right? I want to buy that failure pattern if I can't get at least a 1-to-1. You'll learn more about 1-to-1s in the free video class. Of course, we talk about that more in our trade room, right? If I can't get the 1-to-1 before that retest the high, I got to find a better way to get in on that trade. And as always, right, if this thing starts to rip, right, if we start to really blast going higher here, how do we add to it? Yeah, we always add on with those bear trap combinations here. Very important we understand here, it's a technical bear trap on the initial leg down because again, who knows how far that thing will go, right? But once we get the pop up and they retest, now we have a lot more definitive information now. Now we can trap the rookies selling into it, right? Anyone who sells short up here, we can combine that with their profit targets, use that failure into that trap combination. And if we're lucky, we might get a failure into trap before we get back up to retest the high. I just want you to be aware that it's very important we remember where the market wants to go, retest that high overhead, and make sure we time the entries, get that 1-to-1 before we get there. So that is my rug pull game plan. Being cautious on the move down, being a lot more aggressive on the retest. Go back and see for yourself. Every time we get these big moves down, overall bull market, this is a situation. Again, you might get lucky getting, gambling this stuff, but this is the way consistency works, more consistent way to make money in these scenarios. Now, what if we get a big move going higher here? Because in all reality, right, I think the stage is set for a rug pull tomorrow, but I don't know, right? The markets are wildly bullish right now. Now, going higher here, we talked earlier about a breakout pullback, right? We break out, we pull back. That's a pretty easy one. I know most of you guys know that pattern there already. Very consistent, profitable setup in a range breakout. But again, tomorrow's a news day. So let's see here. What if this thing, it may rip lower and slam going higher here. When news is involved, we oftentimes get what's called basically a pop and grind, right? We may pop up and for whatever reason, we may start grinding and going higher here, right? We may not get that two-legged pullback and that breakout pullback. If we see a pop and grind, you know how to trade this, right? We don't chase after it. We mark off the high. We mark off that low, right? Okay. Pop and grinds are one of the easiest patterns because now at least now you know how to draw that channel. The key is go find those prior swings, and I'm gonna get that bear trap below prior swings, get underneath the 21 EMA, that failure pattern, below the 21 EMA, that failure into pullback. Now, one cool thing about pop and grinds is the pop leg is the measuring leg. So we always say, right, if you want to make more money, don't trade more often, get better at holding on to your winners. Well, half the battle of holding on to your winners is knowing where the winners want to go, right? So one of the added benefits of a pop and grind patterns make it easy to find that channel, but they also make it easy to know where the final target is. That big pop leg up, right? It'll be obvious. It'll spike right up, right? It'll spike right up and start grinding higher. If it spikes up like that, okay, that's your measuring leg. All right, measuring legs. Okay, once we get the pullback here, once we know how deep that pullback is, now we know the size of that measuring leg projects out from there. That's your runner target. Right? I don't care if it takes handcuffs or duct tape or leave the office. On Fridays, you can almost just kind of leave, put stop point of entry, leave that final target, and leave the office if you have to. Let that thing run. Fridays love to close the day on their high of day and their low of day. So leave that runner. All right, folks? That's another variation we're watching for tomorrow. If we don't get the rug pull and we blast up and run higher in the wake of non-farm payrolls. So it'll be that breakout, two-legged pullback, or that pop and grind, which they're both pretty easy. Now you know the roadmap, going higher and going lower. Please, again, though, be careful trying to pick that bottom, right? It's that bear trap and that double bottom retest. That is the magic. That's the magic setup on a rug pull scenario. All right, guys, I'm getting goosebumps just thinking about this stuff for tomorrow. That's the game plan for tomorrow. Now, speaking of tomorrow, the place to be every morning is in our trade room, 8 o'clock Eastern time. The easiest way to start making money in these markets is to learn and trade along every morning at the opening bell. Again, I'll put all the important links you'll need to learn more about this stuff. Start first with the free video course. Enjoy all the trade examples in the free video series. Then come join my trade room and we'll do it all together every morning at the opening bell. In the meantime, hope you learned a bunch today. Hope you use this knowledge to earn a bunch tomorrow. Be well, be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.